Hello and welcome to the next of our lecture recaps. This is a recap of our first lecture on ethical behaviour. So we introduced first of all some terms. So the first one we looked at was the profession. So the accountancy profession is a body of theory and skills. We acquire those theory and skills through education and we're examined to enter the profession. So we're also maintaining that body of theory and skills by continuing professional development. There's also a code of conduct and values which we're now well aware of. This is administered by the body and applies to all members. Remember, we also have a duty to society, and that's something we look at later on in this lecture. We must act in the public interest. Professionalism then is slightly different. That is following the rules. So that's complying with laws and regulations, following the ethical standards, and making sure we act with professionalism at all times. So we mentioned acting in the public interest. Remember, the public interest is a responsibility to the clients, to the government, to investors, to finance providers of businesses, and to employees. So it's a responsibility to everyone, to the public, rather than just a responsibility to your clients or to the business that you work for. So the definition of this isn't that clear, but we're thinking about the general welfare or common interest of society. Do be aware that this may clash with human rights because it may harm the individual to act in the interests of society as a whole. So the individual may harm society and the state may affect the individual. Corporate entities must consider various aspects of this, for example, shareholders and society as a whole. And we looked at that when we looked at corporate social responsibility. When it comes to the accountant's role, well, remember, we must act in the public interest. We must follow our ethical code, and we need to weigh up things like disclosure of information in the public interest against our responsibility for confidentiality for the client. So what about accountancy? First of all, thinking about the role that accountants may have. Well, they may influence many areas, and that's because of so many things that the accountant does. For example, providing that accounting service, audit services, taxation services, consultancy services. All of these mean that the accountant is in a position to influence a lot of areas in society, so they must act responsibly. However, there are things that may limit the influence of the accountant. For example, the restricted disclosure requirements, so the accountant may not be required to disclose everything. Familiarity with the client, which we looked at when we looked at the ethical code. Conflicts of interest, which can arise in almost any area. Also the need for profit, both for accountancy firms and for their clients and for businesses that accountants work for. And the relationship between audit and going concern, the responsibility of the auditor to report on going concern. So the relationship of the accountant with society, well, there is an accountability that accountancy itself will have to society, because previous failings will erode the trust that society has in accountancy itself. There is a potential reluctance to change by accountants. They tend to want to follow the rules. They feel constrained by those rules, and indeed they may simply not want to change. They like the way things are now. However, there are some reasons that accountants should be willing to change. They have the skills to implement those changes and indeed to advise upon them. They have the expertise as well to actually make sure that things are followed through. And through changes, there may be opportunities for the accountancy firms to profit, to actually help to implement the changes. Accountancy also has a sphere of influence in the distribution of wealth and power. They do that because they've got oversight of directors. Often non-executive directors will be part of an accountancy body. They'll also be asked for advice on legislation, particularly financial legislation, and they're involved in whistleblowing. So they form the audit committee, for example, that often forms the whistleblowing function within an organisation. So thinking how we can apply all of this in an ethical way, well, when it comes to the corporation may well have an ethical code. So what are we thinking about when we talk about corporate ethics? We're thinking about ethical business behaviour across all of the entity. It ties in with corporate social responsibility, which we've talked about, and the areas that we'll be thinking about that our corporate ethics should cover will be the mission of the organisation. Is it there to benefit society? Should it be there to benefit society? Employees, maintaining the rights of those employees and the dignity. Customer relations, so a quality provision, that we give a suitable quality product and that we price it in the right way for customers. Shareholders, well, giving them the information and providing a return to them. Suppliers and payment to them, maybe paying them on time or maybe even within the time allotted. And society. So all of these can be covered by a corporate ethical code, thinking about the relationship of the business with all of those various aspects. When it comes to corruption, we need to be aware that there is a potential for it. So we're thinking here about bribery, fraud, extortion, embezzlement. So the problem with corruption is that it's an abuse of power, and every time it happens it undermines institutions, especially if members of accountancy bodies, for example, are involved. So the impact on the firm will be the reputation risk of this happening, legal risks because they can actually be prosecuted on it, impact on staff if potentially the business was to fail, and ultimately the financial cost of corruption. And we go ahead in the next lecture to talk in a bit more detail about some of this with the Bribery Act. So that was a recap of our lecture on ethical behaviour.